My name is Bahram Motamedian. I'm a portfolio manager with USAA in San Antonio. We are a big investor in United States real estate, and we invest in all product types. We see United States in a sustainable growth path over the course of next 2 to 3 years. That will result in good fundamentals for real estate. The big risk that we see in the United States is the possibility of the interest rates going up, and that possibility has an implication on our investment strategy. We are a net seller of core assets today, given the pricing in the various markets, especially in core 24/7 cities. However, we are looking to make value-added and development investments in secondary and primary cities. Specifically, I can talk about our keen interest to make balance sheet investment, using our balance sheet to make investments in office development this year and next year, be it a build-to-suit, pre-leased, and in some respect, maybe even speculative office development. We see that as a wave of the future. We see multifamily slowing down, and industrial speculative development is also coming of age. The biggest risk that we see today for U.S. economy come from external sources and like European Union and how they're going to deal with non-performing loans. And otherwise, we see an interesting opportunity to make investments. Sustainability is a very important part of our investment criteria. Having said that, the investors are not investors or the tenants, while they want to have it, they're not willing to pay for it. So more and more buildings are going to be LEED certified as a given. So having an expectation of sustainability increasing the value of an asset is unrealistic. However, we think sustainability or LEED certification helps leasing the assets and make it more marketable to investors or tenants. With regards to multifamily, whereas 3 years ago, most of the markets in the United States were interesting, and I would say our target markets were 2/3 of the metro area or submarkets that we like. That equation has reversed. So now we're really pursuing about 1/3 of those markets from a U.S. perspective, and that we see a lot of deal flow, but we are not committing to very many. So we see the volume of commitment being made to multifamily development decrease. Our focus has been more on redeveloping existing assets in 24/7 cities or core cities.